Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to our weekly report. Before we get to the charts, I do need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're going to be looking at are real-time market snapshots and may not be replicated going forward. First market we're looking at is the Australian US dollar. Hey, let's jump out to a weekly chart and see what there is to see. Fairly interesting. You know, I always appreciate taking a step back and taking the longer term view of things. You can see your price pattern on this chart is very definitely higher. Your price is above the monthly directional line, so essentially what I'm saying is the intermediate term trend is higher on the weekly, short term trend higher still on the monthly. However, you know, this market still hasn't been able to shake off those first two down strokes, those two big down weeks to start the year, and essentially it looks to me you're in a bit of a consolidation pattern following that down move. So we pop down to a daily, and you know, this to me looks like some sort of a wedge, some sort of consolidation, and you know, flip a coin. Odds are, because it was moving north to south before it came into this pattern, likely that points to it coming out on the south end also. Nothing wrong with a correction in a long-term bull market like that, but you can't jump the gun. You have to wait for a close below that line, and therein lies the fun part of trading. You know, you're always dealing with an uncertain outcome. So that's my way of saying, hey, I'm probably not much help here other than to tell you it could go either way. Something you probably already have a handle on that, correct? But the thing to keep in mind here is long-term, going back out to the weekly, this is a long-term bull market. There's very definitely reasons in place why the Australian currency is so strong. Interest rates primarily, but they have demographics. They have commodities. They're in the sweet spot on the global clock also now. So you know, heed that long-term trend. But be mindful that you expect corrections in the market, that's for sure. Next market, the Euro US dollar. Euro USD finally gave us a correction yesterday, Friday. It was interesting. You could see the divergence building up. I think I pointed out that 240 to you. That I'm not sure why that piece of the puzzle is down there, but you know, you could see this guy, the divergence starting to build, and no surprise, coming into Friday, you had a pretty good correction in that pair. Let's pull out to a weekly. You get perspective. I turn off my daily line. You know, you're up on the weekly, down on the monthly, so essentially you're in a counter trend market. Counter trend markets, you know, you play both sides of them, and you've been in that counter trend market now basically when they shifted the weekly higher 2 weeks ago. So you know, you expect a good sized price movement given the big wide range this market spelled out. So you know, you expect the back and forth there. So longer term, you're in a counter trending market. You come down to the daily, and you can see you shifted the daily back lower. Here you're actually going counter trend now in a lower time frame. That the weekly's up but the daily's down. So you know, markets spend most of their time in counter trend markets, in sideways patterns. So to me, it looks like, you know, you're back to playing both sides. Although it looks like there's some room here for this overall correction. A little bit of room on the downside, as we've seen. Pound dollar. Pound dollar. Boy, that's a tight range too. Boy, that's really tight. You know, anytime I see an up move like that, and I see consolidation, I have to think that's what it is, consolidation. So I'm more in line with thinking this is a flag of some sort, a bull flag. On the other hand, you know, you're counter trend between the monthly and the weekly too. So you know, you're range bound essentially. So you know, keep an eye on that. That's another one where you know, another currency where they're all bunched up there. They're going counter trend. you're in these smaller mean reverting ranges. Not the best environment for a trend trader. It's almost essential that you do know how to get down and dirty on those lower time frames if you're going to trade every day. If you're going to try to make hay in a tight range like that. Let's pull out to the weekly, see if we can get some definition on this guy. None really. You know, you keep getting tighter and tighter. I suppose you can say we're in a big wide pennant, and that certainly would be exciting if someone has a crystal ball that's working, and we could say, hey, which way is it going to come out of there? That certainly would be interesting. I tell you what, these currencies, they're kind of all doing their own thing now. It appears to me they're getting comfortable at these levels, which is probably more the norm historically, that currencies find themselves in these wider I'd say wide price ranges relative to 10, 20 years ago, but you kind of have to throw out 08 and 09, that volatility. So I think it's probably more the norm that currencies find themselves in trading ranges they get comfortable in, and you see more range-bound trade as we're seeing. That's my thoughts on that, and as always, the market's the final judge of that. What she does is how we're going to react to it. But currently, you're in a counter-trending environment in the pound here. Next market would be dollar CAD. And, you might notice I'm really not touching on the fundamentals. I'm certainly aware of what goes on in the big wide world out there. But I think you have to understand that it is the trends in society, nature, and the economy that creates these price patterns. So to me, it's just a given that the price patterns will reflect that. So I'm not too concerned about staying on top of this headline or that development, because I know that the market paints a picture of itself, and that will be reflected in the chart. Very interesting. Here, you're attempting to shift the weekly trend higher here. So you're seeing dollar strength against the CAD, and I really thought once you closed below these levels that opened up the door to those levels that we saw back in the end of 07 there. But these levels are in fact holding now. That's the 2010 low here. I mean, it's be significant, but again, hard to get excited. Coming back to the daily, when I guess you have some room here. I was saying it's hard to get excited when your monthly's down, but your daily and weekly are shifting back higher. That weekly trend will shift. Come that weekly directional line will shift down to here now. So it looks like you have a little bit of room on the downside. Overall price pattern though is bearish. I mean, the overall price pattern is still very much intact despite those horizontal directional lines in place. It's tough to reverse a big trend like that, a big price pattern like that. Next market, the dollar chief. Swissy, I still contend. I think you're in the process of carving out a big wide bottom here. I think this the bull market in the Swiss against the dollar may be coming to an end. They're certainly an efficient economy, the Swiss, but I think in the long run they really don't have the numbers. I think the demographics are going to work against them. The same demographics that they had a powerful working class, they had a powerful middle class. Very hardworking investment class. They're starting to get a little long in the tooth, and they're not going to consume as much, and they don't have as many young consumers coming up to support that. So if you pull back all the way to a monthly chart, you can see that they had that very powerful middle class and investing class over the last 20 years, but those people are starting to get up there a little bit. They still have, believe me, they still got plenty of work left in them. Because I say that because essentially they're my age. I'm talking about the demographics in their late 40s and early 50s. So they're very powerful. But in the long run, they don't have as many 20-year-olds coming up. They don't have as many new people coming into the workforce to buy cell phones and eventually start pairing off and marrying and all that good stuff that generates an economy. This is a long-term bull market for the Swiss, long-term bear market for dollar Swiss, but it's, I think there's signs in place long-term that it's not sustainable at these levels. We'll have to see. He had to change direction candle on that weekly. So my thinking is you're in the process of probably a longer, drawn-out process of carving out a long-term bottom at that 95 level or so. So we'll have to see. Similar dollar yen. Well, here's your daily. This is why they call this guy the Widowmaker. I think you're in the process, again, the long drawn-out process of putting in a bottom here, but with the Widowmaker, because S&P came out, or one of the big rating agencies came out, and they downgraded Japanese debt, and so the yen weakened accordingly on Thursday. See that big green up candle? Dollar yen strengthened, yen weakened. What happens Friday? Boom! It goes right. It drops right back down. So, price is telling you they really don't care what the S&P did. The S&P ratings, or whoever downgraded that debt, doesn't matter, because the market went up, the market came down, so the market's right back sitting on top of that daily directional line. A lot of indecision in here. Boring market if you're a trend trader. If you're an intraday mean reverting trader, you can carve out your Bollinger Bands or whatever you use, and you can just play that thing back to the center, I guess. But to me, from a trend trader's perspective, I don't see anything changing. It's going to be a long, drawn-out process to turn around this market. And here you start to see it. You start to get a feel for it, where you found support late in 2010 at that historic level. The last move down here was rejected pretty quickly, but now things get boring and it starts slumping back down there. So I think there's a possibility of a long-term bottom in place at 80. Same demographics we talked about in Switzerland are going to support dollar against the yen in the long run. Over the short run, and looking back over the last decade, the Japanese investment class, those people in their 50s, 50s, late 50s, they're very powerful. They've got a lot of money, and they're very adept at protecting their money in hard times. As we all know, it hasn't been a tough road to hoe being a Japanese investor over the last couple of decades. So they're pretty sharp at protecting their principal and finding return. And that's one of the reasons why the yen has been so strong, why dollar yen has been so weak, is because the Japanese investors are very picky where they put their money. And until they start deploying it globally, you're going to continue to see a bear market here. But I think, as I said, that's starting to skid out, and demographics and time are eventually going to favor the dollar against the yen. We'll have to see. It's they're obviously both public sector. You have problems in both public sector in Japan and the U.S., but it's the private sector that drives markets. So I think in the long run, U.S. consumers being the driving force behind the global economy will give the dollar an advantage against the yen long term. But for now, the Japanese investment class, just as the Swiss and the European investment class, is what's the private sector investment class is really what's supporting these markets. And for all the negative talk everywhere, that's still public. That's public sector, and it makes for good arguments and good fodder for journalists and people writing on blogs. But in the end, it's private sector money that moves markets. Hey, thank you very much for attending the weekly report. My name's Jay Norris. Look for my new book, Mastering Trade Selection and Management. That's again out with McGraw-Hill, and that will be on bookshelves in the spring. And we get right down to business in that book. I mean, it just spells it right out as far as what to do, how to view markets, how to identify trades, how to manage those trades. Okay, thank you very much, everyone. Have a great, safe weekend, and we'll catch you back here next week. Thank you.